We're going to have about 40 minutes now where we'll be talking about the future of ESG, environment, social governance, a very dynamic conversation that we expect to work out whether ESG is going to keep its momentum and move forward, given some of the events that are happening at the moment. Before we have a panel discussion, just so you know the format, I'm going to have a one-on-one discussion with Alain Bejjani, who is the Chief Executive Officer of Majid Futtaim Holding. So I would really appreciate it if you could join me in inviting him onto the stage. Please join us. Thank you. Good to see you. Thank you. Thanks for being with us, Alain.
Thank you for having me. It's a pleasure.
So, as I mentioned, ESG, a hot topic of conversation, in particular last year when we had the COP26 meeting in Glasgow. Many corporates were discussing how they would achieve their targets and put it at the center of their businesses. I'll offer you congratulations first, because Majid Al Futtaim has definitely been a leader when it comes to ESG in this region in particular, especially on the environment side. And for those in the audience, I'm sure they've all had various interactions with the group across a number of your operations. But maybe from your point of view, the top-down point of view, we could hear how ESG has been, and in particular, the social and governance side of things.
Sure. Thank you very much. I would say ESG is really about getting your fundamentals right. And you've seen how the discussion evolved. You mentioned Glasgow, but also what's happening around the world today with the issue around fuel, the issue around the transition, what does it mean, and the impact that we're all having as organizations, whether private sector or public sector. As a private sector organization, it's very important for any company to actually be, I would say, a real player in the context of stakeholder capitalism. It is an obvious thing that the name of the game is stakeholder capitalism. It's not anymore just creating valued shareholders. It's not anymore about, the business of business is actually business. There is a wider responsibility that we have to deal with, and that is about the fundamentals of our business. This is where the S and the G come into play. It's true, we've been focused on the E to a large extent in the past, but the social impact and the governance impact are very important, because these give you real sustainability to your business. The fundamentals, when I say getting the fundamentals right, I mean, how do you impact your environment in a way that actually makes a difference? How do you become part of the fabric of the environment that you operate in? How do you strengthen that fabric? I'll give you an example. Majid Al Futtaim, for example, made a pledge a few months back now, 3-4 months back, to, for example, hire 3,000 UAE nationals in the company in the coming 5 years. And we have been moving ahead on that pledge. We've already have hired about 500 to 600 people in the past few months. What does this mean? Other than the competitiveness side, it is really about how do you impact the society and the community that you operate in. And that is something that you have to do across the board wherever you are. How do you actually deal with your people? How do you make sure that the talent, the human capital that you have is actually an added value, and people feel that they belong to you, they feel that actually they can entrust you with some of their lives? Because in reality, when you work in a company, let's say, you are rewarded for the efforts that you put in, but you're not rewarded for the time that you spent. And this is a very important time of our life. The only reward that you can give people to attract them, to give the organizations the ability to continue to thrive, is actually by people having a fulfilling experience. This is the S side of things, the essence of it, I would say. And then, of course, governance. Making sure that you have the right governance framework in order to manage risks appropriately and make sure that you don't get into a situation where you are either mismanaged or, I would say, overly exposed to risk where you shouldn't be exposed to risk. And, studies across the globe have proven that companies that are well governed, okay, if you look at S&P Global, at other specialized, I would say, organizations that look at this, organizations that are well governed, that are committed to ESG, etc., have a better and more sustainable financial performance than other organizations. This means transparency. This means independent view into your business. But this also means better outcome, more sustainable outcomes. And from a measuring standpoint, we are in a situation where we need clarity globally and also regionally in terms of what's the S and the G, how do we measure them? What's the framework? We don't have yet a global framework to measure them. And I'd like to say that Majid Al Futtaim was one of the very first companies, global companies. We're 61 companies that started, that signed up the WEF stakeholder capitalism metrics, because we are going to be measured not only against the typical measurement tools that currently exist, being low risk, etc., but we're also going to be measured about other global companies. And investors are going to be able to say, oh, this is how Majid Al Futtaim is faring against X global company, Nestle, for example, or others who have joined us on this topic. So it is very important to give to measure properly, to disclose properly, to audit what you do. So it's not only your word against the word, it's actually third parties that are coming in, looking at what you're doing, saying this is what you have actually done versus what you have actually said, because this will give also third-party investors, whether they are debt bond investors, whether they are equity investors, the ability to invest with their eyes wide open, knowing where they are putting their money. And this gives you as an organization the ability to diversify your sources of investment, to diversify the market that you can tap in. This is what allowed us, for example, at MAF, to start in October 2019, the largest, I would say, global benchmark in terms of green sukuks. We did 2 issuances in October 2019 of $1.2 billion. That actually got us investors that wanted to make sure that they invest in organizations that actually, it's not about what they do, it's about how they do it as well. And a lot of people globally want to, because they are aware of the importance of what they do, they want to make sure that their money is being invested in the right vehicles, in the right organizations, on the right projects. But they want also to have some objective ways to measure that, to make sure that, yes, I am really putting my money where I am told I am putting my money in. I think it's very important. It's very important to be transparent. It's very important to say what you do and to do what you say, but also to have someone that comes and say, well, actually, yep, this is what it is.
I think that from what you're saying, and correct me if I'm wrong, but given that you are the chief executive, the major difference with where ESG is going as a trend now with corporations, unlike CSR or even marketing or PR lines that would talk about community engagement and other things, is that as the leader of the business, you're very much involved with how ESG fits into your strategy and into the execution of that strategy.
I would say I'm very much involved about how my strategy and our business fits into ESG.
It's the other way around.
It's the other way around, because you cannot squeeze ESG into what you do. You have to accommodate ESG in what you do and make sure that the way you go about things is actually environmentally friendly, socially responsible, and properly governed and transparent. It's not about ticking a box. It's not about saying, well, that's what we're doing, and from an ESG point of view, this is how it looks like. It's about really remodeling, re-engineering, redefining your priorities in order to make sure that what you do is as important, how you do things is as important, if not more important, than what you do. Because what you do, you can do it once. But if it's not sustainable, it's worthless. You don't really create value to your shareholders. You don't create value to your stakeholders. You don't create value to your team members. You don't create value to your employees. And you don't add value to the environment that you operate in. And we know how much the world today needs us to put back into the environment more than we take away from it. We know how much we as individuals want organizations that we cooperate with, that we work for, to add to our lives as much as we are adding to their lives. And that's the only way in 2022 forward to actually attract talent and to be competitive in any market. Some people may be more or less aware of the importance of it, but the reality is it's a matter of time. It's not a matter of if, it's a matter of when.
I mean, I would finish with this because we are running out of time, unfortunately, but I would say you mentioned transparency a little bit earlier.
Yeah.
If working around ESG with your business has improved levels of transparency, do you see that having a knock-on effect across the corporate sector in the region?
So I would say I'd love for it to be the case. I think there is more and more awareness. I think the region needs to move from being aware of the importance to actually move into, I would say, action and being willing to do what it takes. Majid Al Futtaim, we're fortunate because we have been brought up as an organization. Our DNA is, although we are a privately owned company, we are fully transparent, whether it's about our financial performance, whether it's about everything that we do. I think we disclose more than public listed companies do. So transparency for us is actually a strength that we would like to use more, and we would like to actually invite others, would like others to actually role model what we try to do, to show people that actually private sector companies do not need to be actually closed, do not need to be discreet. They can be very transparent about what they do, and you're still master of your own destiny. You can decide what you want to do. You can make long-term bets versus short-term requirements. It's okay. There is nothing wrong by saying, I'm doing this for this reason, and by being transparent. What's important is that we move in the region from now, which is good, a level of awareness about the importance of it. That wasn't the case, I would say, a few years back as much, to actually being willing to do what it takes in order to make it happen in a sustainable way. This is in everyone's best interest. We'll create more value, we grow our economies, and we create a much more vibrant place that will attract, not only grow local talent, but attract global talent as well. I think Dubai is a great example of that.
Well, we've run out of time for this conversation. ESG, it seems, does help you build resilience into a business, which is extremely important in this day and age. Please join me in thanking Alain Bejjani for his time. Thank you, Alain.
Thank you.
Thank you so much. Yes, see you soon, I hope. Thank you. Well, we're still going, still talking about ESG. We have a panel that will be coming up onto the stage in a moment. I'll make my introductions once they're here and we get going into the conversation, because as I said, we don't have a lot of time left. And I need to give up my seat, actually. Please. Okay. So this is the last panel discussion before lunch, I think. So we'll make it the best one yet, for sure. Thank you so much. I'll get straight into it because, as I said, we're kind of on a tight schedule here. But we want to drill down into ESG. We want to talk about it, not kind of theoretically, but in terms of in practice. And we have a panel here that has a varied experience and really is on the front lines of what is happening. I mean, perhaps the first thing I can talk about, if I'm able to get Neil Brown's thoughts from KKR, is to understand, do you outperform with ESG compared to investors or funds that do not use ESG?
Yeah, oh, there we go. Can you hear me now? Okay. Absolutely. I mean, it's actually a pretty easy answer, a straight yes. We formalized our ESG program in about 2008 or so, so we have a lot of data now. And what you see is with a rigorous ESG program embedded in our funds and in our companies, you're more responsive to customers, you're more responsive to employees, you're more responsive to shareholders. And the data show that this distinction out there between so-called shareholder capitalism or stakeholder capitalism is just a false divide. Actually, you produce much better returns for everybody when you embed it, but the key is to make it real. It needs to be measurable, it needs to be verifiable, and it needs to be transparent and reported.
So the transparency and the measurement, very important. Kristen Weldon from BlackRock, if I can bring you in here, do you share those opinions?
Absolutely. So thank you for identifying me by my surname as well, because I think there's two Kristens up here. But absolutely share the same view. About 2 years ago, we identified that there was going to be this tectonic shift in assets, in sustainable asset management. And I think we've seen that now in terms of about $4 trillion invested sustainably. And that really underlies the view that we have that better integration of those factors that Neil just mentioned ultimately leads to better investment performance. And I think the reason really for that is because we look at that integration truly as a risk management tool. So being able to identify ESG risks and opportunities that are financially material results in better long-term performance and more resilient portfolios.
Thank you. Chris Hulatt, Octopus, you're on both sides. You're an investor, but also you're raising money as well. So how do you see this particular issue?
Yeah, absolutely. I think there are two quite different lenses to look at this through. So for us, increasingly, when I speak to institutions around the world now, it is not just what we do that matters, it's how we go about doing it. I think people really care about the values that organizations have. When I meet pension funds, I talk particularly about what do we care about, what matters to Octopus. For us as an organization, we recently became something called a B Corp, which has been really important to us. There are very few B Corps around. They are businesses that have changed their legal status so that they are very purpose-driven in how they go about doing things. And that, to me, is a real differentiator. Those sort of values are so important in demonstrating what do you care about, how do you do things. For us, everything we look at is through the lens of not just our customers or our staff, but the environment, the communities we operate in, and our shareholders. And I think that gives us a perspective that is really important. When I look at ESG, I think one of the real challenges is it shouldn't just be sort of box ticking. How do you bring it to life? That is when it becomes really powerful. And that gives you things that you can talk about with your clients. And I think it also means that you think about the underlying projects very differently when you're looking for that extra angle.
So we have an investor point of view, and Chris obviously sits in on kind of both sides, but we also have a consumer kind of corporate voices here today. So I'll kind of broaden the conversation out to them. So Kristen Siemen is from GM. You're here from the States, from Detroit. ESG is your absolute day job. And so, from your point of view, where does this conversation, when it's investors, when it's companies, what's the most pertinent kind of aspect of it right now that you're aware of?
Sure, thank you. I mean, ESG, in fact, Kristen and I were talking outside the room, that umbrella is getting bigger and bigger of what's falling under that umbrella. But I think at the highest level, if you look at traditionally companies, and GM included, we had a lot of focus on what was happening from an environmental standpoint. Spent a lot of time, on energy efficiency, water efficiency. As we've broadened our view of what sustainability is and what falls under there, it really encompasses not only what we do, but how we do it. And, things like our product quality, product safety, community engagement, involvement, just transition. You could go on and on of all the things that are under there. But I think the important thing is consumers and employees care about how a company operates and how they accomplish their goals and how they put a product into the market. And so that focus and really looking at it from that lens of how do we address the challenges that are out there around climate change and around making sure that there's equality and opportunities for everyone is really important, and the consumers care, so it ends up being a positive for the company, for the employees, for investors. You talked about resiliency and how a company responds.
Thanks, Kristen. I think more than ever today, stakeholders want to be engaging with a good corporate citizen. Eugene, Willemsen, you run Pepsi in the region. I'll bring you in. I mean, very much, I think, from Pepsi's point of view, I would assume that given governments are looking at policy when it comes to sustainable initiatives and other aspects of ESG, kind of from the private sector point of view, but also Pepsi, I assume you want to be at the forefront of that. You want to be engaging with this trend.
Yeah, we absolutely want to be at the forefront of it. We're the leading food and beverage company across most of the markets in Africa, Middle East, and South Asia. So we also see it as such as a responsibility for us to lead also from an ESG perspective. And within that context, we launched about a year and a half ago our end-to-end transformation across the entire value chain, which is PEP Positive. And it actually touches many of the points that Neil referenced earlier. Clearly, it's measurable, it's very transparent, but I'd like to add one element, which is end-to-end. Because for us, also being a company that has a massive agricultural footprint, it's really important that we touch the entire value chain. We've committed ourselves to measurable and very aggressive targets. So by the year 2040, we want to be a net zero company across the entire value chain. So both Scope 1 and Scope 2, but also Scope 3 activities. We also want to become a net water positive company, which means that within our four walls, and we're going to do whatever we can to minimize water usage, but also we're going to deploy our techniques and our know-how to save water beyond our four walls, whether that's with the farmers that we work with, or whether that's with other farmers that we don't directly work with. And we have a couple of great examples actually here already in the region. One of them I saw recently in Riyadh. We have a Big Snacks factory in Riyadh. And through a partnership that we have with alfalfa growers, which is not a crop that we're using, we've been able actually to turn that facility into a net water positive facility by saving water that these farmers were using for their crops, leveraging our technologies. So for us, absolutely critical. It's measurable, it's transparent. That's also what our stakeholders and our consumers demand from us. And we have very aggressive and ambitious targets that, and that's the last point I'd like to make, the entire organization, top to bottom, has fully bought into and also has in their objectives to deliver on. So it's part of my objectives as a CEO for Africa, Middle East and South Asia to hit my objective when it comes to all the elements that fall under PEP Positive.
I mean, clearly we can see that by adopting a lot of these strategies, there is going to be a long-term impact, and a good one, hopefully. But, you know, we live in you know, someone said yesterday, you know, we've got to live in the real world, and in the real world, short-term factors come into play all the time. Some harder than others, whether we're talking about geopolitical or otherwise. I mean, Neil, KKR is a long-term investor. But how do you marry the long term with the immediate short term noise, but also ensuring that, you know, you're keeping to your ESG goals?
No, it's a good question. I think the key is that ESG is not something that you add on to an investment. It's not something you add on to a fund. You know, we're managing around $470 billion these days across all asset classes. And what we see is that every company should incorporate it into just the culture, as Eugene talked, from top to bottom, and into measurable results. And every company can make a difference. And if they can make a difference, they can also produce better returns. And so, you know, I think we have to remember that, you know, we're co-hosted here with Atlantic Council talking about energy. Thinking about ESG and the energy transition, it's hard work, right? Like this is not puppies and rainbows. Even within the renewable sector, thinking about issues such as conflict minerals in the supply chain. You know, Eugene mentioned end-to-end. How do you get confidence that the decisions you're making that could be good for climate may not be good on other ESG factors? So you need that view. You need to do the work to make sure that you have that plan in place to make the product as ESG friendly as possible. But then there's also the other side of our economy, which are browner, are more polluting assets of all sorts. That's true at, say, upstream oil and gas. That's also just true, let's say, in chemicals or whatever it is. We have to decarbonize those industries. That's really hard work. It's as an investor, it's always easier to say, oh, I'm just not going to do that investment, right? Leave it to somebody else. But if we're serious about these ambitions, we need to do those investments. We need to put in the plans to decarbonize, to introduce more diversity. We need to be held accountable. We need to be transparent. But that, to me, is the next wave of how we're going to have a more active, ESG-friendly investor community going forward. I think we're going to move beyond the simple labels that I think have dominated the last few years.
Kristen, Siemen, you were nodding when Neil was talking about the long term. And then, of course, you're a publicly listed company. And so, you know, a lot of short-term considerations. So how do you manage that?
Yeah, I mean, I think the long-term goals are important, right? I mean, you have to start somewhere. If you look at our renewable energy goal, we set, you know, 5 years ago, we set a goal that we were going to be 100% renewable energy by 2050. And 2 years later, said, you know what, we can do it by 2035. And then last year, we accelerated that to 2025 in the US. You know, and so by setting that long-term goal, you get started, right? You have to start somewhere. And so whether it's, you know, our carbon neutral goal for 2040, we've got a goal, a commitment to eliminate tailpipe emissions from our light-duty vehicles by 2035. That's a long way off. You know, short term, but we've got a product portfolio in place that takes us down that path. We've committed, you know, over $35 billion by 2025 with AVs and EVs, 30 new EV models by 2025. So I think you see those short-term progress, and then you set the long-term commitments. So you start seeing yourself get down that road to be there. It engages your customers, engages your employees, and I think really sets you up for success in the long run.
Kristen, Weldon, you run sustainable investment for BlackRock. Is sustainable investment by its nature always long-term?
Well, certainly in my role it is. So I'm responsible for sustainable investing across our alternatives platform. So actually in quite a similar position to Neil. So we manage over $300 billion across a set of alternative asset classes. And it's imperative that we take that long-term approach. So I understand Kristen's point. I think that you need short-term metrics in between to measure and make sure that you're on the right path. But the long-term approach is critical to make sure that you see that over the lifetime of an asset. So we're integrating sustainability factors from origination through due diligence, but probably most importantly, through that value creation mechanism that happens in the private markets. Therefore, you can apply that lens and hopefully have better sort of exit for that company when you eventually come to sell, because you do have that long-term perspective.
I mean, Chris, Octopus Group, it seems you're living up to your name. I mean, tentacles in lots of different companies. And your measurements, what you have to measure your business by, the fast growth startup, are completely different. I mean, you may not, I mean, forgive me, but I mean, long-term might be too optimistic, right?
I guess it depends on different parts of the business. We have a venture capital team that is investing in backing hundreds of entrepreneurs, where how quickly they can grow over 2 or 3 years is really important. But equally, for us as a renewables investor, we are looking at building assets that will last 25, 30, 40 years. But the bit that is really powerful is you now have this confluence of investors wanting to put capital into the sector, while at the same time you have organizations like GM wanting to use that power. So that's when it's really powerful, is when you have demand for the offtake and demand for the capital. Our pension fund clients in the UK at the moment are saying, how can you double the size of our portfolio? You know, energy security in Europe is such a fundamental issue. The UK government will be updating its energy strategy soon, and building renewables as quickly as possible is a really important part. So these are long-term assets, but why does it take years to build a wind farm? Which, because there are so many bureaucratic steps that go between an investor expressing interest and being able to start building it. How can you compress that schedule and allow capital to make a difference more quickly? And just touching on the point about, I think you were making around, you know, how do you get engagement? Well, to us, it's trying to bring communities along with you. If you just build a wind farm next to a village without really giving them any opportunity to share in the benefit of it or understand why it's being done, then that doesn't work very well in the UK and in many other countries. But if you allow communities to maybe access the power from the wind farm at a reduced rate, then you get buy-in. If you go to a place like Australia and you go to the Northern Territories and you work with communities to wean them off diesel-powered electricity generators by building solar in those communities, then you have a story which investors really want to do, incredible ESG credentials, but massive impact on those communities.
Thanks, Chris. I'll go to Eugene now, because, I mean, Pepsi's, you know, quite an old company, and you've sort of seen consumer taste change, corporate landscapes shift. From your, I guess, your corporate point of view, is ESG here to stay? Is it something that we'll still be talking about? Hopefully we'll all be back here in 10 years. We'll be talking about that still, and how it's moved on. Are you confident in that?
Yeah, no, absolutely. I think there's only one way for a company to be a sustainable company and provide sustainable returns to its shareholders and other stakeholders, which is by truly embracing ESG. And if you look at the PEP Positive strategy, for us that's an integral part of our overall business strategy. So it's not something that is an add-on. It's an integral part of how we conduct business, how we do business. But in all fairness, it's also, if you look at the targets that we put out there, those are really ambitious targets, and it will require a lot of collaboration across the value chain and also participation from other stakeholders, including governments, to collectively help us achieve those targets. Yeah? So just on the topic of energy, as an example, in many of my markets, purchase power agreements still are a challenge. Yeah? And that for us is critical in order to move to renewable electricity, just as an example. So it's absolutely here to stay. I think there's a lot of heavy lifting that will come from corporations like ourselves, General Motors, other corporations that have committed to bullish targets. But we will need to have other stakeholders also lean in a very meaningful way. And we need active participation from governments to put the right legislative framework in place, but also create the right infrastructure for us as companies to deliver on those commitments.
Thank you. For the rest of the panel, I guess it's the same kind of point. Kristen, Siemen, you are ESG at GM. I mean, yep. Will you still be ESG at GM for years to come?
Well, I can't do it alone, right? I mean, like you said, it's really integrated into our culture, and I think that's an important part. You know, we talk about it at General Motors. It's just like safety and quality. It's not an add-on. It's part of absolutely every person's job of how you look at it. I loved your discussion around the community, because it's another area that we feel very strongly about, is whether it's where our facilities are and working with the communities on what they need that facility to provide, and how it interacts with the environment in that space, or how this transition, in our case, to an all-electric future doesn't leave somebody behind. We talk all the time, our mantra, our brand is everybody in, because we know we can't do it by ourselves. It takes policy, it takes our dealerships, our customers, governments, et cetera, to really make that transition real, and also to make sure that nobody's left behind as that transition occurs. You know, these major transformations have a history of leaving communities behind, particularly communities that are disproportionately affected by climate change. And so we're doing a lot of work around equitable climate action to make sure that doesn't happen. So, you know, like you said, at Pepsi, ESG is not an add-on. It's part of our culture. It's integrated into our cultural goals, our business goals, our ESG goals are really all the same.
Neil, do you expect to be making investment decisions for a long time with ESG factors as part of that process?
Yes, but I think that over time, I hope we get to a place, I think we'll get to a place that you don't even call it ESG investing, you call it just investing. And I think that, you know, today there's a lot of speculation of whether the current situation we're in with energy shortages, with the conflict, you know, there's this question out there, did Putin kill climate kind of things, you know, this speculation out here. The same questions were asked at the onset of COVID as well. And how will the world respond? And what we saw was an even stronger move towards ESG, towards climate. I'm hopeful that in the broad space, that some of the tribalism we've seen on climate versus fossil fuels, on ESG versus whatever else, I'm not even sure what the right phrase is, that some of that tribalism gets bridged in our current moment of crisis, that we realize that on the environmental side, on the climate side, that energy reliability, security, and affordability are the foundation upon which sustainability is built. And then on the more traditional side, on the fossil fuel side, that you don't sort of go out and gloat to say, you know, come from the U.S., you know, drill baby drill sort of thing, that the pendulum will swing back, and that the investment decisions that do need to be made today to increase production are done in the most sustainable way possible. And if we can get that kind of pragmatism back into the debate, I think that we will, come out of this current crisis even stronger.
Kristen, Weldon, do you think that sustainable investing will just be investing?
Absolutely. So I think Neil took some of the words right out of my mouth, but we identified sustainability as our new standard, going back now probably 2 years. And I think in time, it'll just become part of what we do, and hopefully my role won't exist, and it'll become integrated throughout all parts of the investment process. I think Neil raised a point earlier as well, where it can't be done in tandem with taking into account traditional factors as well. It is part of that investment process. It's part of due diligence. And the longer that we go on like this, the more kind of inherent it will be to the investment process. We won't have to separate it as a separate ESG integration or sustainable investing process, full stop.
Chris Hulatt, the last thought with you on that subject.
Yeah, absolutely. Well, I agree with what the others have said. But to me, we now need to take this forward. So when I look at the kind of formal documentation and reporting that we prepare, and for us in this industry where ESG is such an important factor, my concern is that this becomes, these ESG documents and reporting we send to our clients almost designed to be weighed rather than read. And I think that is, a shame and a mistake. And what we really need to do is get engagement sort of bottom up. One of our big pension fund clients has 9 million underlying members in the UK, normal people. And what they really want is to communicate to those 9 million people that a sliver of their money is invested in, say, a wind farm in the middle of the UK or a solar farm in Spain or whatever. And for that, they don't need ESG reporting. Really, what they want is a 40-second TikTok video. That is almost a more powerful way of communicating the value of that capital. And when you have that bottom-up engagement combined with the attitudes of the institutions and the corporates, that's when change really happens quickly and is very sustainable and permanent.
I hope the discussion we've had today would make a good argument that ESG isn't just PR. It's not just touch points on a press release. But I think we can see from these brilliant people here and also the other brilliant people working in this sector that it really is something that will have a very positive effect for all of us. So please join me in thanking our panel for today's discussion. Eugene Willemsen, Kristen Weldon, Kristen Siemen, Chris Hulatt, and Neil Brown. Thank you so much.
Thank you for having us.
Thank you.